Hello dear traders, you're watching the weekly review of financial markets with me, Anna Kasatkina. The US stocks closed higher last Friday ahead of the long weekend as trade war fears regressed following reports that the President Donald Trump may ease restrictions against Huawei technologies. The Nasdaq Composite rose to 7,637.01. The indices rebounded slightly from sharp losses on Thursday after President Trump said Thursday afternoon the ongoing trade war could be over quickly. The Dow Jones Industrial Average ended up at 25,585.69. However, the Dow fell for a fifth week straight, posting the longest weekly losing streak since June 2011. Its weekly decline was 0.7%. The S&P 500 index climbed to 2,826.06. For the week, all indices ended lower, with the S&P 500 down by 1.2% and the Nasdaq by 2.3%. The market took relief from a week of mostly unsettling headlines linked to trade tensions. Thursday's losses stemmed from a growing view that the US and China were moving further apart on a trade deal. At the same time, a separate report said that the Commerce Department was considering tariffs on countries that undervalued their currencies to the disadvantage of the US companies. Currently, no country in the world meets that specific criteria, but the US has long unofficially viewed China as a currency manipulator. Energy and tech were the worst performing sectors for the week. Chip makers led tech down as Vector Semiconductor dropped by 5.6%. The shares of Foot Locker slid by 16% after the sporting goods retailer fell short of analyst expectations for first quarter earnings and sales. Autodesk shares fell by 4.9% after the company reported a surprise first quarter loss and revenue growth that were below Wall Street expectations. Shares of Snap gained 4% after the Wall Street Journal reported that the company is in talks with major record labels to enable users to include music in posts on the Snapchat app. You've watched a weekly financial review on Insta TV, and see you back soon. Bye.